Hello and welcome to Martyn Lucas Investor. My name is Sensei. Thank you for tuning in to the morning forecast show. Live unemployment data today. We might be getting some emergency rate cuts. Remember, there's only one more data. There's only one more rate cut sort of priced in for 2026 now. But today's data can change it all. So thank you everyone for tuning in. Let's get straight into it. Let me go over to our newsletter. I think everyone should have received this by now. We are 40. Let me just move this actually. We're about 49 minutes away from the data being released. If you have just tuned in, please do make sure you have hit the like button and you have also subscribed. Let me do that. There we go. So in about 49 minutes time, we're going to get this unemployment data. It's not just this week's unemployment data. It's not just this month's unemployment or November's unemployment data. We're getting October's unemployment data. That's why it's quite a big release. And we're getting 2 and 1. Remember, there was that shutdown. No, nothing was released in October. We're going to get some jobs data from October. We're not going to get any unemployment data from October. Why? Well, because they couldn't actually go out and collect that data. So for the first time in around 40 years, we don't actually have 1 month's worth of unemployment data, but we do have other jobs data from that. So let's go into today's newsletter. Remember, you can get the newsletter. It is 25% off right now. It's the first link in the description. And you can get prepared for the carry trade, which is potentially unwinding on Thursday night. Friday morning for some people, and we'll have special coverage on Thursday, so you can go and grab that. Also, all the figures for today's jobs data is also in here, so you can have it alongside today's show. If you have just tuned in, please do hit that like button and subscribe. So just a quick, and even there's a free newsletter and everyone gets this, the top stories at a glance, so you can just get all the news stories without the fake news, without any ads, still with part of the free newsletter. So what are the top stories that we look into today's newsletter? It is UK labour data market worsens. So we actually have unemployment hitting 5.1% here in the UK. That was released today. That might be a precursor to what happens today with the US. But yeah, that's not good. But what it does mean is that rate cuts are now pretty much certain. So remember, good news is bad news to an extent. If we're in a recession, of course, that's not good news, apart from the fact you can buy in quite low. But right now, the narrative is bad news is good news. So what does that mean? It means if unemployment's higher today, it means that's good news. Why is it good news? Well, because rate cuts can come, liquidity can be injected into the market, and we can have a rally. So do remember that. We also got NASDAQ eyeing up overnight trading. They've submitted a proposal for 23-hour trading. Everyone's trying to come on to what crypto's all about, which is 24/7. We've got Trump suing the BBC. We've got luxury homes in London hitting lows. So high-end sales hit post-pandemic lows as tax changes and mentioned tax fears drive global capital elsewhere. This is not just about the rich people. This is about how the economy is working. So that's why it's an important story. We've also got PayPal seeking a bank charter. And we've got historical double jobs report, and that's what we're focusing on in 46 minutes. A historical jobs report. Investors must navigate distorted data from a government shutdown to gauge the Fed's 2026 rate path. So remember, we had the FOMC last week. It does seem like the Fed is only going to cut one more time in 2026. However, if the data changes, then obviously they will change as well. And today we're getting a large. This is sort of 2 months data in one, so it's going to be affecting the markets a lot. Let's move on to the one big thing. It's an important one big thing. Let me just go over to the live chat, see who's here with us today. Good morning, my favorite show. Oh, thank you very much. Your morning show is the favorite show. I love it. Thank you very much for your support. Who was that? Who said that? It was Teresa. It was Teresa, I think. Yeah, Teresa. Thank you very much. Ricardo's here. Good morning, Banana Heads. We've got Last Biter here. We've got Moon here. We've got Potato Family. Good morning. Have we just got? Oh my God! Brian has just become an Electrum member. Look at this. Brian has just become a special member. He's become an Electrum member. That is the VIP club. Thank you very much, Brian, for becoming a Electrum member. We love it. You get access to the Sunday quizzes now. You love merch, and right now it's very there's not that many people that participate in that Sunday show, so the chance of winning is quite good. So I look forward to seeing you this Sunday there, Brian. A little bit late in the UK, but I'm sure you will be able to join us. Potato Family says, good morning, OXRP. Please go up. Please don't be too emotional with your trades, because I don't know if you're joking or it's something we like to say. Of course, I would say XRP, please go up as well. But my emotions aren't please do this, or you have to go up, or it has to go down, or I'm going to get liquidated if we go down, or if it goes up, I'm going to panic buy, or I'm going to I've already you don't need it to once you get into the logic in your head that it needs to go up, or please go up, or everything depends on XRP going up, you start that's the definition of being emotional. And if that's how you're feeling, anyone who's watching this show right now, you don't understand what you're holding, you're over leveraged, you've got too much in the market, or you don't, or you're new to the market, because those are the reasons you lose. If you get too emotional about your trades, if you think it has to go up, or you just need to be in a situation, and this is the easiest way I can explain it. You have to be in a situation where you're prepared for it to go to $10, $50 in the long term, or $5 in the short term potentially. You're prepared for it to go down to $1.50, $1 in the short term, medium term in a bear market, potentially even lower. And you're also prepared for it to go sideways. If you are happy with each of those scenarios, then you're fine. In my opinion, again, not financial advice, because that means you're not going to FOMO in on the way up because you've already got your targets. You're not going to panic sell on the way down because you're prepared for it. And if it goes sideways, you might just accumulate, or you won't do anything with your position. If you're prepared for all three of those scenarios, you're fine, in my opinion. Teresa says, XRP, what do we do? Sell and then buy back? I'm not selling or buying back. I'm a long-term investor. What does that mean? It means I don't really day trade my long-term position. Yes, I've got a portfolio, a smaller portfolio, where I like to buy at $2, sell at $2.30. I like to buy at $1.85, sell at $2, $1.75, sell at $1.85. But buy limit orders at $1.50 when we had that, or $1.70 when we had that liquidation in October the 11th. Sell at $2.30. I like to do that with my small portfolio because I've been in the markets. I've done technical analysis for about 8 years now. I've been researching the markets for about 4 years. I've been researching XRP. I've been in XRP for about 8 years as well. So I'm confident to do that with a small part of my portfolio. However, my long-term portfolio, even though I would consider myself very well versed in XRP and trading XRP, I wouldn't even think about my long-term portfolio in that way, unless I knew for certain we're going to drop, which no one does. I would keep my long-term portfolio there, 80% still invested, And then what am I doing? Well, if it drops during the carry trade, or if that does unwind, or if we do have liquidations, then I just buy at my specific levels. I don't sell my portfolio because I do think XRP will one day be $5, will one day be $10, will one day be $20, $30, and then potentially 50, 100 down the line. So why would I want to sell just to save a few pennies? That's what I don't do. And again, once you sell, you've got this $1 million question: when do I buy back? Do I buy back when it's at what point do I buy back? And if you're too late, then it might go above that level, and then you might FOMO in, and then it just for it to crash another 50% down. It's very hard when you make a decision to sell. You also need to have a decision when to buy, and you need to be prepared that you might actually be buying back higher than when you sell. So it's a very hard question. I don't give financial advice, but that's my experience with it, and that's the reality of it. Rhino Skin is here. Let me just see if I can put this timer on the screen. No, that's the wrong timer. Let me just change that. This is for this is going to be for the jobs data. I'm just putting a time on the screen so everyone knows when that's happening. Teresa, depends on your DCA, I guess. Human being Liz is here. Lovely to see you here, Liz. Don't listen to this nonsense channel. Do your own research and make decisions. What an absolute load of nonsense for that comment. Don't listen to this nonsense channel. I feel like your comment is nonsense. Do your own research and make decisions. Yes, that's what we always promote, doing your own research. Okay, guys, everyone leave. Don't watch this channel. It's not like we've won multiple times. Starship says, I sold and will buy back when it crashes this week. See, that's dangerous. When it will, and I will buy back when it crashes this week. How do you know it's going to crash this week? How confident are you it's going to crash? How do you know? When are you going to buy back? Are you going to FOMO in because you have no position now and you're going to be more emotional? Yolanda says, hello, everybody. I'm not, look, for me, if I had to choose, I would say this week is bearish. I think we'll go down this week. We already broke $2. We've already hit one of my targets this week. If I had to choose a direction, I'd say bearish. But remember, weekly predictions they're not very, I mean, how accurate can it be with a weekly prediction? But if I had to choose, I'd say bearish. What does that mean? Does that mean I'm going to sell my whole portfolio? No, it doesn't. It just means I have plenty of money on the side. If you don't have plenty of money on the side, or if you're all in, then okay, yes, there's a problem with your portfolio potentially. But my whole premise, if you've been seeing what I've been saying for the last 2 years, is always have something on the side to deploy, especially at times like this when there is a potential for a crash, when we are potentially in a bear market. If you don't have money on the side, well, how are you going to take advantage if it drops? But at the same time, about 75-80% still invested. Who else is here? Rhino Skin is here. Poor Man Rich Man is here. David is here. Thank you, David, for the research. Human Being Liz says, hello, Sensei. Thanks a lot for the letter. No worries. I'm glad you're enjoying it. Roya, I don't know what you're referring to. Nothing's come through. Maybe your text was too long. Yolanda says, hi, hello, Liz. In other words, a big portion of the anticipated policy shift has been digested by the markets, says Roy Tumba. Rallo says, morning all. Let me just go through these comments. And then we're going to come on to the jobs data. It's about 38 minutes away. There's a lot to get through. It's really important, actually, today. There's 2 job datas in one. If you have just tuned in, please do hit the like button and subscribe if you want that whole newsletter of all the numbers about today's jobs data, how I will be looking at it, and the chart, which is actually XRP today. The chart of the day in the newsletter is XRP, plus the whole carry trade and Japan's interest rate coverage coming to you Thursday and tomorrow, plus a special cheat sheet for that event. It's all coming in the newsletter. You can grab it for 25% off right now. I'll put that link in the chat. I think it's hilarious that individuals on here would state that the channel is nonsense, but come here to be a part of it. Vinman says, hopefully the criminals don't treat XRP like they did with AMC. I think the XRP army is strong enough to cause some real short squeezes if anyone starts to do that with XRP. Revved Up Biker says, good afternoon from the UK. Jossie Costa says, Jerome Powell said he will not trust the data. Yeah, he said he'll revise it down 30 to 60,000. That's what we got from around 60,000. He'll revise it down. He's not going to not trust the data. He just said the revisions will come in, and that's what we expect the revisions will be. Morning show is also my favorite. Oh, thank you very much, Taythorn. Love it. That's good being positioned. Chep says, I agree with you. Learning technicals helps a lot too. Yeah, I'm so excited to bring to you the technical analysis training course. It's going to be the new upgraded one for newsletter premium members only. Um, and it's just going to be additional. We're not raising the cost. It's just going to be a part of it. So it's essentially free for people that are already there. So obviously, always trying to add more. And that will be great because I don't treat technical analysis like become rich like a day trader and other people that sell courses. It's just a tool in the toolbox. It's not a get rich quick scheme. It's just one more thing. Keep it simple, put it together with a fundamental research, and then it will help you control your emotions and win. And I'm going to make it as simple as possible. I might even just do it as one video where it's just 1 hour, 2 hours long, just going from the very basics for anyone who doesn't know anything about it to the most complicated things. But by the end of that, you understand it all. And I want to do it in just one part. So hopefully that'll be coming out. I'll probably film it over Christmas and that'll come out to newsletter. So again, if you haven't got the newsletter yet, go and grab it because right now it's 25% off. XRP is moving. Yeah, it's looking to double bottom potentially here. I don't get it either. The only thing I can think of is they get picked on in their real life, and their real life is so they get on the internet and become keyboard warriors. Thank you, David Hensley. Traded out of XRP, just some of it. My decade is 233. My decade is 233. What do you mean by that, Teresa? Who else do we have? We've got revved up, but we're about 35 minutes away from jobs data, so please continue to hit that like button, subscribe. If no one's done it right now, I can't show you. At the bottom right hand side of the chat, next to the super chat button, there is actually a button here. You can't see me do it, unfortunately. Let me see if I can move this over slightly for a second. There's a button here that lets you do the like button again. You see that slightly on the right hand side? You can basically press the love heart again. I want to see if everyone can start getting the love going in the chat. Let me see if I can make this just smaller so we can see everyone doing it. I think we'll see everyone doing it now. There we go. We can see it. Yeah. Everyone's doing it. Look at that. Look at on the right hand side. Yeah, if everyone could do that and also hit the real like button, that would be great. If you've already hit the like button, do that as well. Look at that. Look, it's right next to. That's great. I love it. I'm going all in with XRP when. So sorry, I missed the comment here. Revved up back. It says sell, pay tax, panic buy in, repeat. Easiest way to lose. There we go. Josie says I am all in on XRP when Solana goes to $100 because of a prophecy. I'm all in on XRP when Solana goes to $100 because of a prophecy. Jared says, good morning from Alabama. Enjoy some coffee and adding to my bag. Congratulations, Jared. Welcome to the show. Daddy Pascal is here. Daddy Pascal says, yep, I've explained this. So this clock here, I'll remind everyone again, that's the time where the live data comes out. So you see that clock over there? I'll explain again. In 33 minutes time, we'll have that live data coming out. I just lost the comment. I apologize. Oh yeah, Daddy Pascal says, hi Sensei, DCA more XRP. Me, myself, and I are very bullish. Good luck to you. I have my strategy, you have yours. Matt says, it is already priced in the crash and institutions sold off already. I wouldn't say it's all priced in. If we actually have a proper unwind, it's more mechanical, it's underlying. That's what will cause it. And again, we don't have certainty that there will be a rate hike. I have become really good at holding and not selling on dips in panic. Never trade on emotion. Yes. Never trade on emotion. Hi all, hi Sensei. Thank you, Brian, for becoming an Electrum member. Stephen Mariana says, I'm a huge fan of investing in a few projects that I think have a real world utility, especially with this financial shift. I'm a huge fan of investing in a few projects that I think have real world utility, especially. Yeah, it's good. But remember, in a bear market, they will go down 90%. Even if they're the best coin in the world, they will go down 90%. Why? Well, because they're an altcoin and they've got low liquidity. We're 32 minutes. Okay, okay, let's get ready for that data. I'm just getting some information from behind the scenes. XRP is becoming a tier one asset. Um, I think XRP you can categorize. I think it's the four big ones. I think are Bitcoin, Ethereum, Solana, and XRP. If I'm talking to my friend down the street and he says, "What should I do? I want to invest in crypto, but I have no idea what I'm doing." I'd say take those four coins, put them as part of your portfolio, and just DCA into them, or just buy a lump sum and forget about it. Or if you the next time you see a big crypto news story about everything's going to zero, or you see a big liquidation, just buy in. It's very and then you're fine, in my opinion. But again, I wouldn't give that advice to everyone on air. I'd say that to my friends. Where do you think? Where do you see the price of XRP after Friday? Thanks, Paul. I'm prepared for both situations. I don't have a prediction. Chris says, I'm not selling. I'm certainly not saying it's going to $100 or $1,000 because of a reverse carry trade. Okay, so we're 30 minutes away from um, the live data being released. We're just in the live chat right now. I just want to put that timer up there so you guys know exactly when that's coming. I'm not selling, not now. The clock is saying. I don't. I'm not selling, not now, where I'm worried I'm losing the most on XRP because I'm only down $250. I'm just going to sit back and enjoy the ride and buy if you guys are great. Thank you, Chris. Good luck to you. Okay, I'm just going to skip these comments now because I have to. Actually, I'll just answer members only now. Human being Liz says, hello, good morning from work. H84L Shield says XRP is none other than a long-term hold. No millionaires in a week on this crypto. Yes. Teresa says DCA. RB is here. Smash the like button. Smash the like button. Yes, thank you very much. XRP is going up again. We will be keeping an eye on XRP throughout the live coverage of the data. So within, I just dropped the biggest amount of money on a limit order on XRP for when it hits $10,000. I think when it hits $10,000, that's when I'm going to start looking at it. It's not going. Are you joking, David Hensley? It's not going to $10,000. Members badge check. Fix the problem. Yeah, it's back. Brilliant. Bitcoin, you got your badge back. Bradley Holder says, is there another way to move up on XRP? I'm just listening to members' comments for now. Potato Family says, oh, XRP, I bought you at 30 cents. I talked about you every day. People know about you. Oh, XRP, just pump to $5 this week. Just let everyone know that you're still alive. We can hope, but there's no point. No, I didn't say from work. I asked David Hensley if he's working. Oh, right. Sorry, Liz. Okay, here we go. Time for our coverage of the unemployment data and the jobs data all coming out in 28 minutes time. If you have just tuned in, please do hit that like button and subscribe. Our data always comes from the newsletter. We have got a full report on this as part of our one big thing and our deep dive. Plus, you'll get special coverage of this week's carry trade and Japan's interest rate hikes. You'll get special report on Thursday about that. Plus the technical analysis trading course, plus the daily newsletter, plus the budget planner, debt planner, plus the portfolio app coming out soon. And all the deep dives you get, and additional expert written newsletters. That's not even me. There's other people now going to be writing some expert led newsletters. So all of that's coming, but you can get it right now for 25% off. If you do support the newsletter, that would be amazing. Okay. So the one big thing today is, you guessed it, sort of about this data, but mixing in inflation data that's coming out on Thursday as well. So big inflation data coming out, CPI. So the inflation blind spot. Markets risk misreading a soft jobs report today as bullish, only to face a sharp hawkish contraction when inflation figures arrive on Thursday. That one sentence is important. Let's not zoom in too much to today's data. Very important day today, but do not be blind to the fact that later on this week we get CPI. We get a big inflation report with multiple inflation reports in one. Just like today, we're getting multiple jobs data in one. There's a part two to the story, and that part two is Thursday with inflation. Today we're getting jobs. Thursday we're getting inflation. Remember, the whole point of the Fed is to control inflation and keep and control the jobs market. So we're getting two parts of the story. Today is one big part, Thursday is another big part. So let me read that again. Markets risk misreading so if we get soft jobs data report today, you might read that as really bullish, but and you might go all in, leverage, brilliant, rate cuts are coming, just for Thursday to come around and you get awful inflation figures. So be careful. If it is going to be a really good jobs data print today, remember there's part 2 on Thursday. The government shutdown has eliminated critical short-term inflation data, leaving investors with an incomplete picture for Thursday's CPI release. Because the Bureau of Labor Statistics cancelled the October report, the market will only receive year-on-year figures without the usual month-on-month context. This forces Federal Reserve to gauge price stability using a slower than precise metric. If remaining annual data shows sticky inflation alongside high wage growth, it immediately undermines the argument for 2026 rate cuts. So keep that in mind. Now we're going into that. Now we're going to be going into that full report. Let me make that bigger. Yeah, the full report on the jobs data. Remember, this is all from our daily newsletter. You get this every day. Top stories at a glance on one big thing. Fear and greed. Really bad for crypto right now. Not too bad for stocks. But remember, I like to buy when there is extreme fear, and we are in that territory. So I'm more likely to buy today than I was ever at $3 or $3.20 for XRP. The number that matters today. You get a different number every day, 4.5%. Why does that number matter? Well, markets consensus for today's unemployment print is 4.5%. That's what's priced into the market. That's what the market thinks. 4.5%. Maybe it's just slightly, maybe 4.4% percent is also sort of priced in. But yeah, mainly 4.5% is priced in for the unemployment print. Holding this level indicates a cooling but stable labor market, allowing investors to maintain a soft landing narrative while leaning on secondary poll data and wage data. So that's priced in. That's what you would get, and the market won't react on that. It will look at other data. However, if that figure's higher, essentially you've got more unemployment, we start moving into the recession category, but not drastically. What that means is you would expect more rate cuts because the Fed doesn't want a recession, and that would push the markets up. So if we actually get 4.6, 4.7, I imagine, again, you have to look at all the other data points, and you have to be a really look at each of them, which we will when it comes out. But just if this was in a vacuum and we got 4.6% or 4.7%, you would actually think the market will go up. Because remember, bad news is good news. Why do I say that? Well, bad news would be bad for the economy, however, good for the stock market. Because if we get 4.6, 4.7% reading today on unemployment, and that's in 24 minutes time, if we see that number pop up on screen and it's 4.6, 4.7, essentially what that shows is unemployment's going up. What's the Fed's tool that they've controlled that? Well, they bring on they cut interest rates, and when they cut interest rates, they're essentially putting some money in the system and acts as sort of rocket fuel, liquidity for the markets, and that's great for tech. It's great for crypto. So bad news is good news. Bad news for the economy because we're close to a recession, but good news for the market because we get rate cuts. You got the winners and losers today, the market snapshot as well. You go on to our 5 things you need to know. Look, this newsletter, 5 things. It's very simple. Read the newsletter. You will know the 5 things you need to know every day. If you read these stories every day, in a year's time, in 6 months' time, in 3 months' time, in 2 months' time, you will be such a more informed investor because you'll know what's going on in the markets. You won't be tinted by fake news out there, and you will be able to make better decisions. And that's just by reading the 5 things you need to know every day. And that's about the UK jobs data. That's about NASDAQ moving to launch. So I'm going to scroll past this and come on to, just because we only have 22 minutes left. And of course, I want to leave parts for the premium members to read by themselves and not give it all away. But it's important to cover the double barrel jobs report today. We've got Jerome Powell in the dark right now. So what is going on today where we're getting jobs data? If you have just tuned in, please hit that like button and subscribe. If you haven't got the newsletter yet, it's 25% off right now. Right now, there is the link in the chat. Don't know yet. I had more cuts last night. Hopefully better today. Vaz is in the chat. What's happening to Vaz? Let me just see what he said. Hey, banana heads, just dipping in and out. Don't know yet. I had more. What was that in relation to? Don't know what Vaz is on about, to be honest. XRP is like a house being built. Only the time frame is built. It still needs some windows, doors, and tool work to be done for it to be useful. That's actually well said. Yeah, everyone thinks XRP is ready to deploy for the reverse carry trader. We could just come in and take on trillions of dollars. It's not. It's not there yet. This technology needs to be built. It needs to be tested. It needs to be integrated. It needs to grow slowly over time. It's not just a sudden event that takes it off. So yeah, there's still work to be done. But yeah, it's one of the best technologies, even so. Okay, we've got our Christmas mugs, by the way. If no one's got the Christmas mugs, go and check out the merch store. We've just released our Christmas mugs. So I'll put the merch store in the chat. There's also XRP merchandise that we pay for the logo. So go check out the merchandise store. We have just released our Christmas mugs. So let's come on to our jobs report, because that's coming out in 20 minutes time, and it's going to be a very big one. We've got Bloomberg coverage in the background. We've got this ready over here, 21 minutes time. Look how much data is coming out in 21 minutes. The market, there's a lot of data coming out. Average hourly earnings, average weekly, because we're getting October and November numbers here. Labor force participation rate, non-farm payrolls, retail sales control group. We've got retail sales excluding autos, and this is just the things that are important. Unemployment rate from November. Remember, we can't actually get an October unemployment rate because no one went out interviewing. Underemployment rate, average hourly earnings month on month, average hourly earnings year on year, average weekly hours, non-farm payrolls November. And then we actually have a little bit of data that will be on Martyn's show later at 2:45 UK time. So that would be in about an hour and 45 minutes, about an hour and a half. Martyn will be covering the S&P Global Composite PMI data and the S&P Global Manufacturing PMI. But yeah, this is all that's coming out in 20 minutes time. So yeah, a lot to digest when that comes out, and the market will certainly react to that information. Right now, XRP is. We did look at this double bottom on the newsletter. It does seem to be holding for now. The task is to get back above $2, break this downward sloping resistance level, and go to $2.30. That is also a real possibility by the end of this week. If the buyers come in, and we'll explore this in the carry trade newsletter tomorrow. My thoughts on this, what actually will happen because of the carry trade. Is it all priced in, or what are the mechanics behind it? If we do get that scenario where it's priced in, it's not officially priced in, but I'll explain that in the newsletter tomorrow. But let's say it's priced in on that narrative, and we get a run. What we want to see is a break of $2 and back up to $2.30 after this double bottom. So I'll be exploring that further. Again, there'll be a full cheat sheet for Thursday/Friday's Bank of Japan interest rate rise and the carry trade. Remember, it's about 11 p.m. US time, 4 a.m. UK time. So yeah, make sure you've got that 25% deal to get all of that information. The link is in the live chat. So 18 minutes to go. Here we go. Let's do our full special report now. Let's go. The double barrel jobs report. This is Jerome Powell flying blind. The markets faces a historic anomaly today. Due to the 43-day government shutdown, investors must digest 2-in-1 employment reports covering both October and November. The core narrative is a clash between policy-driven distortions and organic economic cooling. Consensus expects a meager 50,000 jobs plus for November, while October is anticipated to show a sharp contraction driven by federal workforce reductions. That's all to do with Doge. This release creates a data void where the Federal Reserve is flying blind on October's unemployment rate, complicating their decision on whether to cut rates further. So remember, we're not actually going to get October unemployment rate because no one actually went and collected the data. So it does create that little bit of a void. But we have to look at the data we do have. So the data docket, what is releasing and what to watch. These will all drop simultaneously. All of this will come out at the same time. So make sure you don't focus on just one in a vacuum, and the market will digest it all in a few minutes. So what's going to happen is going to be a lot. We can't just focus on one number and say if that goes up, that goes down, the market will pump. We can look at that and look at what the most important one is. However, there's going to be a lot of data coming out together, and then about 1 minute, 2 minutes, 3 minutes later, the market would have seen all the headlines of all of them, and then it'll make a decision on which way to go. The one I'm looking at probably is the most important. I would say would be unemployment rate. Unemployment rate, which is about 4.5%, is what's expected. Also, we'll be looking at average hourly earnings as well, and also non-farm payrolls. So there's quite a few things. Non-farm payrolls is pretty important as well. So let me just give you some of the numbers to look out for. Non-farm payrolls. Remember, we're getting October and November figures for non-farm payrolls. For November, the consensus is 50,000 plus. If we get below 30,000, or if we get under, we get negative numbers, what we're seeing there is more people losing their jobs, suggesting that we might increase our chance of a rate cut. We've got the same sort of data being released in October, but we're already forecasting negative 50 to negative 70,000. Why? Well, because of the Doge cuts and the federal workers exit. So if those two are lower than what we see, that boosts the idea of a rate cut. The main one that we'll see within a second will be unemployment rate. The consensus, and it will be November's, because remember, October, we couldn't collect that data. So it's for the first time in about 40 years, a chart, which is not good, but it's fine. That's why November's is actually going to be more important. So unemployment rate, November, 4.5%. That's what the market's priced in. If it's higher, 4.6%, 4.7%, we can start triggering the SARM rule, which is a recession signal, if we start getting higher. If it's just 4.6, 4.7, we can essentially see the market rise, because there will be more chance of a rate cut. And the markets like rate cuts because it injects liquidity into the markets. It's not good for the economy, it's good for the markets. Remember, bad news is good news. And the bad news is we're entering a recession potentially, but the good news is it means the Fed will cut rates. So a higher number than 4.5% would essentially, if we were looking at it by itself, would essentially move the markets higher, in my opinion. But it's very hard to trade. I wouldn't be trading these sorts of days. I'll be just looking at what the aftermath is to get prepared for the inflation report on Thursday, and also the Bank of Japan rise. Sometimes I trade these events when it's severely out of line. So if I catch it beforehand, so if I see it, if let's say an unemployment rate was come down to 4%, and everyone's got lots of jobs, I'll say actually the market's not going to like this because there's no rate cuts. I would start a short position straight away. But that's built on knowledge and experience, and I don't do that. Maybe 3 or 4 times a year I'll do that, and I'll make a lot of money. But that's based off. We'll get there one day with once we start seeing these datas over and over again, and you start building a better picture and you become a more informed investor and trader, you can do those trades. But for now, I wouldn't recommend anyone does them. I never give recommendations anyway. I am not a financial advisor. Okay, now let's move on to the main part. If you have just tuned in, if everyone could just take 1 second, I'm going to pause for 1 second. We're going to cover everything, but just take a second. Is what you're showing on the newsletter? Yes, Raw. Yes, it is on the newsletter. Please do hit the like button. I'm going to take a second. Someone asked, is this information in the newsletter? Yes, this information is on the newsletter. It's in the daily newsletter. You will get the special report. For example, last week we did the FOMC report with all the charts. This week we've got the Japan interest rate decision. That's going to be in the special report in the newsletter. You get your daily newsletter. You get the budget planner, the debt planner. You get the Portfolio Insights app first on the list for that. The technical analysis training course. All of that is in the newsletter. Has everyone hit the like button? I'm still waiting. Some people haven't hit the like button. What's going on? Have you subscribed? It takes 1 second. Have you got the newsletter? There's even a free version. There's no excuse not to even have the free version. Okay, let's continue. Number 1, the data void and federal distortion. Sophisticated investors are currently discounting the headline October numbers. The Department of Government Efficiency, DOGE, initiatives resulted in approximately 144,000 federal employees leaving payrolls on September the 30th. Goldman Sachs estimates this created a 70,000 drag on October payrolls. That's why when I showed you the October numbers, we were expecting negative 40, negative 70,000 on October's numbers. The market is pricing in this government contraction. The real risk lies in the private sector signal hidden underneath. The private hiring, excluding government, dips below 40,000 plus in November. It validates the bear case that the economy is bulking under high rates. That's the numbers we're looking for. The next one is that we need to look into 2026 and the Fed pivot. So, the Fed's 2026 pivot point. The bond market, remember the bond market is something we're talking about. We'll be doing further research on. I'll talk to you more about that in a second. Essentially, we're starting our portfolio challenge. The first thing I'm going to be deep dive researching into is all the different type of bonds, because when I'm starting this portfolio, the stock portfolio challenge, I'm probably going to start off in bonds until I start seeing opportunities in the market. So there's going to be a whole bond research within the newsletter. And it's important to understand the bond market because it's bigger than the stock market. The bond market and the Fed are currently in a standoff. The Fed has signaled a pause and wait approach. We saw the FOMC that we're expecting one rate cut in 2026. They are waiting. They're waiting for data. When are they going to get data? Well, they're going to get some data today in 11 minutes' time. The Fed has signaled a pause and wait approach, projecting only one rate cut in 2026. However, traders are positioning for aggressive easing. The traders think that they're actually going to cut more. If data misses, we're talking about data now. Today we're getting data. If data misses, and what I mean by misses, I mean in the sense that we get weak jobs data and weak retail data, where you get bad numbers, and what that means is more likely to enter a recession. If we get those sorts of numbers, if we miss on jobs and we end up losing more jobs or adding less jobs, or the retail spend is lower, essentially what it means will be treasury yields will collapse as the market is forced to abandon the Fed's one cut. So essentially we will be expecting more rate cuts and the treasury yields will come down. And at the same time, we'll get equities, crypto likely to pump because we'll expect more rate cuts than just the one. If data beats, and in this situation, good news is bad news, and this is good news. If data beats and there's less people losing their jobs, so a surprise upside in November jobs would validate the Fed's one rate cut approach, forecasting a sharp sell-off in duration assets like tech and bonds. So essentially in that scenario, bonds, the price of bonds will sell off, the yield of bonds will go up, and you'll get tech and crypto also sell off because you're validating that there's only going to be one rate cut, sort of showing you that there's not going to be much liquidity coming in. We're going to go back to numbers in a second because we're about 9 minutes away from this as well. UK unemployment has risen to 5.1%. Yeah, DJ Haynes, have you read the newsletter, mate? It's in there. we've already covered it. That's a good point. Thank you, DJ Haynes. So for example, thank you for actually bringing up DJ Haynes. So in the newsletter today, we covered this story over here. This is the UK jobs crack. Bank of England now rate cut now locked in. You will get headings like this if we get unemployment at 4.6, 4.7% in the US. Why? Well, because the UK just had unemployment at 5.1%. Now we're getting headlines like even in my newsletter, but it's true. The Bank of England is now set to cut rates because unemployment has moved up too much. So when we're looking at this over here, and in 9 minutes' time, we're going to get non-farm payrolls and unemployment rate. If we're forecasting 4.4, 4.5%, and we get 4.6, 4.7, instead of the Fed Watch tool suggesting only a 75%, only a 24% chance of a rate cut, that will go higher to maybe 50, 60, 70% for a January 28th rate cut because the economy is not looking good and they'll start having to cut rates because unemployment is looking more concerning than they thought. And you can literally see that's just happened in the UK. Are we going to get that continue in the US? So let me go back to our newsletters here. It could be the exact same thing happening in the US, but we will see. If that unemployment number is 4.6, 4.7%, that's when we can start seeing the same headlines and the non-farm payrolls are less than expected and the retail sales is lower than expected. And then that's what we can see. So if data, we've done that one. So remember, if data misses, and what we mean by misses is we get a worse jobs number and more people are losing their jobs, then equities will likely pump. If data beats and more people have kept their jobs and more jobs have been created, equities will most likely sell off. Bonds will sell off. And remember, bonds there's a number, there's a price for a bond. If the bond price comes down, your yield goes up. So people will be getting more money, more dividends essentially for their bonds. And if you can get more dividends for a very safe investment like bonds, what's the point of investing in the stock market? That's why the stock market will go down. Sectors rotation signals, the last one. We are seeing a two-track economy. If you have just tuned in, I just do ask you do hit the like button and subscribe. Sector rotation signals. We are heading into a two-track economy. Healthcare and private education are shielding the headline numbers, accounting for nearly half of recent net growth. Defensive rotation. Institution flows are coming into healthcare and utilities. We're seeing it broaden. We're coming out of the Mag 7 into the rest of the S&P 500 or into healthcare and utilities. Cyclical risk. With retail sales expected to show a tepid 0.1% growth, discretionary sectors are vulnerable. A double miss, weak jobs, weak retail would likely punish retail stocks and regional banks. So that's when you'll see potential, the broad side of the S&P 500 sell off, but the Mag 7 go up and actually move the market up. So that's also data that's going to get released today, which is over here, retail sales, expecting it at 0.3%. So the so-called retail sales group data released by the US Census Bureau on a monthly basis measures the value in total receipts of retail and food stores in the US, excluding receipts from auto dealers, building material retailers, gas stations, office supply stores, mobile home dealers, and tobacco stores. The data is adjusted for seasonal variation as well as holiday and trading day differences, but not for price changing. Retail sales data is widely followed as an indicator of consumer spending, which is a major driver of the US economy. And at Control Group is more precise measuring of gauging consumer spending. Generally, a high reading is seen as bullish for the US dollar, while a low reading is seen as bearish. We're getting that in 6 minutes' time as well. So a lot of data coming out. So let's finish off this special report and I'll give you my final thoughts. That's the wrong newsletter. That's our silver newsletter. Let me bring this over here. So the structural implications, the missing October mechanism. Remember, we're getting some October data, some November data. That's all coming out today. That's why it's quite a big one in 4 minutes and 37 seconds. But there's one piece of data that we're not getting, the October data, and it's never going to come out. And that's the unemployment rate, which is probably the most important figure we're going to see today. The most critical anomaly in this report is the permanent loss of October unemployment rate. Because the BLS field interviewers were furloughed during the shutdown, the household survey, which generates the unemployment rate, was never conducted for October. This means there is a blind spot in the data series. We will jump from September's rate directly to November's. We will never see October's. The Fed will never see October's. It wasn't collected. November is going to have the effect of October and November put together. That's going to happen in 4 minutes' time. Investors cannot see the velocity of deterioration during the shutdown. This unnecessary, investors cannot see the velocity of deterioration during the shutdown. This uncertainty, remember, we don't know if it was good numbers or bad numbers, and if it was bad, we haven't seen the deterioration. This uncertainty creates a higher risk premium. Algorithms may struggle to interpret the trend without intermediate data points, potentially exacerbating volatility if the November numbers surprises even slightly. Yes, so Martyn is going to be going live in 4 minutes' time. I'm going to, as always, when we have data, continue for another 10 minutes' time after I normally end, and then send everyone over to Martyn. So you do have the choice now to stay with me or go over to Martyn, who will be going live in 3 minutes' time. As always, I'll be continuing the show for another 10 minutes. And then be going over to Martyn's Morning Bell show. So we're 2 minutes and 43 seconds away now. If you haven't hit the like button, please take a second to do it. If you haven't also subscribed, please do subscribe. And let me just take a second to talk to you about the newsletter. This newsletter is something I literally quit my job to do, to come on the show and provide you with the best news. Right now, there's too much fake information on X, on other news agencies. People are taking corporate sponsorship. We don't do that. There's no ads on this newsletter. So what do you get as part of the newsletter? And today it's 25% off. The link is in the live chat as I speak. Every single day you get this full newsletter. So what you get is every morning, this is 5 hours of research every single day. You get the top stories at a glance. There's a free newsletter as well, and you get that part of it as well. So you get the market news headlines, the top stories at a glance. You get the one big thing, what's so important that I'm looking at. You get that straight away. You get the fear ingredient index, the one number that matters. You get the winners and losers, the top stock movers. You get the market snapshot, and then you get the 5 big things, the 5 stories you need to know every single day. You get the deep dive every day in the newsletter. You get the chart of the day, the exact chart I'm looking at every single day. You get my thoughts per story, so I give my consensus on every single story. You get event cheat sheets. Last week we did the whole FOMC cheat sheet, everything you need to know about the FOMC, the numbers, the days, the dates, the times, the 5 charts that were important for the FOMC. You get deep dive research. You get emerging tech, that will be starting to be written by experts now in their fields. We've got one-on-one DMAC. You can message me anytime, one-on-one. You got the debt planner and the budget planner coming by the end of 2026. You got the portfolio insights app coming in 2026. You got the technical analysis training course I'll be filming over Christmas. 8 years of it put together. This week we've got the carry trade, possibly unwinding the Bank of Japan. There's going to be a special cheat sheet, especially for the carry trade, focusing on XRP, carry trade, what it means for the markets, is it pricing, is it not? That's all going to be part of the newsletter. So if you haven't got it yet, please do consider grabbing it. It's 25% off right now. The link is in the live chat. It's also in the description. So we're now seconds away from this data. It's refreshing now. Let's go over to breaking news. Here we go.
Headlines of today, and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know.
I am just fast winning, so make sure we're right on time. Here we go. Bloomberg surveillance will bring us the data.
For more than a week right now, this is how the stage.
Here we go. We are up to date to the
a little bit of softness heading into this non-farm payrolls print, led by the Nasdaq. Futures lower by 0.2%, 2s, 10s, and 30s. A little bit of a motley picture in the bond space. On the front end, just slightly up. On the long end, yields bid, maybe because of Michael Collins with that 30-year
yield. We've got XRP and Bitcoin pumping right now.
Heading over to Michael McKee. It is that moment for the data. Mike, what do you see?
Unemployment rate 4.6%. That's up. Rate cuts expected now.
Unemployment rate for November of 4.6%.
More than expected.
Higher than it was in September, 4.4%, and it's higher than the 4.5% that we anticipated. Change in there's no October unemployment rate, of course. 64,000 is the change in non-farm payrolls for the month of November. In November, the unemployment rate 4.6%. Let me run through this a little bit here. What we want to find out is what happened in October. Loss of 162,000 jobs. Can that be right? In October, they're looking at a lot of federal jobs that went away. Maybe that's the 162,000. Let me just run through a couple other things here, and then I'll check all of these numbers. Change in private
big loss in
November,
October. Big loss in October.
Positive. Manufacturing payrolls down by 5,000. Average hourly earnings less than anticipated, up just 0.1% in November. 3.5% for year over year, and 34.3% for average weekly hours. A dumpster dive and this on fire, and I'll find out more for you and be back in just a second.
Please do that, Mike. So we'll hold tight on that if you want.
Okay, well, he doesn't know what he's saying, so let me tell you what's going on. We've got, let me just remove that from the screen. So what we've just got there is retail sales are up a little bit since from the consensus, so we can just write that off. That's not too important because it's so close. We've got retail sales control group, that's up from 0.3% forecast to 0.8%. But the big number here is we're expecting 4.5% for unemployment rate. What we got today is 4.6%. That is not good for the economy. That's not what Jerome Powell wants to see. However, it does mean that they should start, that they can't just afford one rate cut in 2026. So that's good for rate cuts. What we've got also is the non-farm payroll. Negative 105,000. We were expecting negative 40 to negative 60,000. We got more jobs being lost. So again, that's playing into it. More jobs are being lost than expected. What else do we have? That's the big one. Yeah, non-farm payrolls for November slightly above what we were expecting. It's just very close to consensus, so you can disregard that. So what we're looking at is unemployment rate 0.1% higher than expected. That's pretty significant. And we've also got October's numbers, more people losing jobs than expected. So again, that points to we can't just have one more rate cut, but it does also point to a specific situation which is not good, which is unemployment going up, which is good for rate cuts. But we're getting inflation on Thursday. So we're doing this all again on Thursday. Thursday, we're getting inflation. If inflation's gone up as well, the Fed has completely failed on their mission to keep inflation and jobs under control. And the market might start reacting down based off that. Let's go back to Bloomberg for their report.
Because that's sort of fuzzy. It's what are the implications?
Do make sure you've hit the like button. Do make sure you've subscribed. If you want the full data for Thursday's CPI, it will be in the newsletter. If you want the full data for Japan's carry trade, that's also in the newsletter. It's 25% off today. I think you can actually get it on the monthly plan as well right now. So I'll give you that link, but let's go back to Bloomberg.
Or less. And so my first read on this is that, yes, we have what we expected, ongoing softness in the labor market, but it isn't creating a pullback in the broad economy. And that's going to be a really key narrative moving into 2026.
Which is the reason why people are bidding up equities and risk assets, even with potentially a worse than expected number. Michael Collins of PGIM Fixed Income still with us. Mike, just congratulations. You were positioned correctly ahead of this. I'm just wondering whether this was the read you were looking for, if this is just bad enough to keep the Fed in play, but good enough to the point that Francis was making to keep risk assets potentially attractive.
Yeah, we haven't heard the Goldilocks economy phrase lately, but, as Francis said, this is actually not bad, right? An unemployment rate, ticking up slowly, job growth close to zero. She throws out that, 30 to 40,000 numbers, kind of the new normal, right? So don't be shocked by these really low job gains. I think they're just kind of standard given the population growth is really trending down in terms of immigration and births and deaths. I mean, fertility rates in this country have plummeted. And so this is the natural state, right? And it's not bad. It keeps the Fed in play. It keeps rates coming down a little bit. This is what we call the muddle through environment. And we have like a 50% base case probability on this muddle through, which is, growth slow but okay, inflation a little sticky, but not going up anymore, maybe even coming down a little bit. The Fed cutting rates a couple more times, rates staying in a nice range here. And corporate earnings have been really the star here. Corporations, the private sector has been the star, right? And they continue to figure out how to keep their margins up, which has really been surprisingly impressive to me.
Hold on one second, Michael and Francis, we'll get back to you one second. Michael McKee has some more information after diving into the dumpster fire. Mike, what do you see?
There we go. Let's see if you can get it right this time
It looks like
round.
October was a really terrible month. 105,000 jobs total lost. And
I told you about this. We're better than Bloomberg here.
Was the total loss of government jobs in the month of October. We also lost jobs in construction, about 1,000, and in manufacturing, 9,000. In the month of October, just about everybody lost jobs somewhere during the month. Leisure and hospitality is a bit of a surprise because we lost about 9,000 jobs there in November, and that was lost 12,000 rather, and that was expected to be a sign of strength. Retail hiring, as Francis had pointed out, it's up. It's not extremely strong, but of course you've got seasonals working into this situation as well. But you got a 12,000 roughly gain there, 6,000 gain for the retail trade during the month of November. Speaking of retail, did not mention these numbers earlier. Retail sales for the month of October come in flat. The 0.2 gain in the month of September revised down to 0.1. And the retail sales control group, much better than anticipated, comes in up 0.8 after a negative 0.1 in September. So in October, people were still spending, got a rebound there, even though we lost a lot of jobs in the month of October. And it looks like there's a bit of a rebound in November. Not huge, but we are seeing a little more strength than we had.
Michael McKee, thank you so much. Damien, we do see the move in the markets kind of temper itself as people look at the details. Look at the fact that the response rate wasn't great, and look at the fact that there's a lot of strength despite some of the weakness that we see in the unemployment rate.
And in August and September, we saw revised down by another 33,000 as well. I mean, I'm just looking at the unemployment rate ticking up to 4.6%. The labor force participation rate also ticked up, so that could be fueling a little bit of that as well, which is, means it's not as bad as you would have otherwise thought. But yeah, I mean, you had some backward revisions, 33,000 jobs lost in August and September.
Okay, so essentially what we've got going on here is the unemployment data seems bad on first glance, 4.6% compared to 4.5%, which we're expecting, which is obviously not good news. Bad news is good news, so you would expect that bad news to be fueling the market up. However, it seems like every other data point, which we're looking at apart from that job side of things, is actually showing good strength. So we need to digest that report a bit more. And that's why I always say careful when you trade events like this straight away. You need to let it digest. And right now the market's digesting. Is it actually as bad as we thought? So that's what Martyn will be discussing now in his live stream. I just want to give one final reminder that I will be covering the Japan carry trade on Thursday. That's going to be the big event. We're going to be putting in together a whole newsletter for that. If you haven't got the newsletter yet, that will please do consider getting it. If we do get overwhelming support, then of course I will cover it. But yeah, please do and grab that newsletter, whether it's a free or paid version. It is 25% off right now. So there we go. That's today's unemployment data. The unemployment data itself ticked up. We would expect more rate cuts to come. However, it does seem like some underlying data out there is actually pretty bullish, such as the retail sales, which is showing strength. So it means that potentially the Fed doesn't have to cut rates. It all comes down to what the market is expecting on Thursday. Thursday, we are expecting CPI to come out. We're going to come back and cover CPI with you. That'll be the final straw. That's when we'll have all the data together. And today's research we put into this and what we've understood from today, we have to apply it on Thursday with CPI. That'll be in the newsletter as well, plus the carry trade. So that's all coming together with the CPI, because remember, the Fed needs to control inflation and unemployment. If CPI is up as well, that's when we'll have a concern in the market. So there we go. Coming Thursday is going to be a big show with CPI and the carry trade. Now we're going over to Martyn. Who's already live over here.
I'm still in. And I'm down very slightly, 0.25%. 18% of my portfolio on my main account. I've got a similar number.
Okay, Martyn's live now. So I'm going to send everyone there. If everyone can go over there and annoy Martyn, what should we say to Martyn this time? Someone's already there. Widgeto says Sensei crushed it. Can everyone go over to Martyn and say I did a good job? Everyone go over. This time I want everyone to say Sensei crushed it. Follow. Someone in the chat already has said, let me try and move out the way. Sensei, over here. Sensei crushed it. If everyone can go follow Widgeto1 and also start copy and pasting Sensei crushed it. Let Martyn know I did a good job. Thank you everyone for tuning in. We'll be back. I'm going to start my special report on the carry trade tonight. Again, I'm going to go over to the team in London to start putting together that carry trade report for you guys. That's going to be a big one. It'll be our best one so far. It's our cheat sheet for Japan carry trade, all the charts. So everyone go over to Martyn, start saying Sensei smashed it. Sensei smashed it. Sensei crushed it. Go and do that in Martyn's chat. We're going over there right now. Go grab the newsletter. Thank you everyone for tuning in. Thank you for the overwhelming support as well. Until next time, take care of yourselves and each other. See you tomorrow and see you on Thursday for the special report. Bye-bye. Start saying not here, Stephen. You have to go over to Martyn's show and say Sensei smashed it. Thanks, guys. Bye-bye.